Welcome to this afternoon's webinar. Well, it's afternoon for us here in the UK, which we call the day trading webinar, where we'll be looking at the indices. I think we've got the gold chart today, David. We're going to be looking at. I think David's got the gold chart. I think I've got the YM. But before we start, move over to the charts. Can I just draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And here we are, myself with David. We'll be looking at the markets through the prism of volume price analysis, but supported by the quantum trading tools, of course. Both of us have got Ninja today, actually. I've got Ninja 7, which I still haven't got around to sorting out my Ninja 8, but I will for next week. Today's obviously Wednesday. We've had to move the session forward for various reasons, but we are back next Thursday. I will have my I will have Ninja 8, and David, I know, has Ninja 8 with him running. So it's VPA and the quantum trading tools. We've got some fundamental news. We've got looking at related markets, because all these markets, all the 4 capital markets, are all interrelated, and they all impact the price action. One will impact the price action on another, and I'll show that in a practical way when we look at my Ninja workspace. But to this, we obviously have to add what is going on with the on the political scene. And certainly this morning, of the 2 webinars that we've done thus far in the Forex market, it's all been about the British pound and the chaos that we have in the UK at the moment. Well, it's been going on since the referendum. Is it 3 years ago? Was it 3 years ago that it happened? 2016, wasn't it? It was 63. Definitely. I think it's definitely. It feels like forever. I can assure you, it really does feel like forever. We're no nearer any resolution, other than it looks like we won't be having the current Prime Minister for very much longer. However, of course, it's all impacted the British pound. As I said, we covered that in quite a lot of detail. If you want to catch up with what we said in terms of VPA, how the fundamentals, the political risk also impacts the charts, the 2 recordings for those sessions will be going up later on today on YouTube. But we're in the US session. Today is FOMC day. If I just bring up Forex Factory, not the most brilliant of economic calendars. I used to rely on it quite heavily, and for those of you who've with us earlier on will heard us going on about it, where the sort of classification of some of the releases, David and I don't feel, they've changed them, and we don't believe that they are correct. That's our own opinion. So, for example, news releases such as retail sales here, it's not red. Core retail sales is red, but I think the retail sales, that's sort of downgraded to orange. Others have been upgraded. Anyway, that's for a webinar all of its own. What's happening immediately ahead is we have the Fed member Williams speaking. We've got the crude oil inventories, which will obviously impact the Canadian dollar and the US dollar as well, and the FOMC meeting. Just very, very quickly over at investing.com, just to see where all the futures are at the moment. We've seen the S&P's down. This is the cash Nasdaq, that's down as well, and the Dow is down, although I was looking at my YM chart, it had a little bit of a tick up, and it's all about China and the war of words between the US and China. It is a war. As I said, there may not be bullets being fired, but there are words instead, and it's causing all sorts of issues in the markets. But this is why my YM space, as you can see here, I've got a Renko. I've got the 3-minute. I've actually got the 480-minute chart. This is the this breaks up the sessions into the 8 hours to cover the Globex, and I've got the daily chart, and I've also got a currency strength indicator here, because you say, why are you looking at currencies when you've got the YM there? And the currency that we need to keep an eye on is the Japanese yen, which is this magenta line. We've actually got an index for it, because As the yen rises, equities tend to fall, and as the yen falls, equities tend to rise. So it has an inverse correlation. And as I said, the move that I had on the YM, we had the sudden spike higher in the YM, and the yen actually was moving down sort of simultaneously. But the most interesting chart for the YM is this. This is the daily chart. This is what we're trading around at the moment. Apologies there, we also had a dog and the phone. Anyway, because two things that are of key importance at the moment. First of all, the volume point of control, where we see the price action has been sort of anchored for the last 1, 2, 3, 4, 5 sessions. And much more importantly is we have this very, very strong resistance level up here at 26,000. These days moving down, these big ranging days, we had volatility, and usually on the daily chart, really reflecting what was going on with regards to the the dispute going on between China and the US. But these big ranging days are just, from a day trading perspective, are fantastic. It was price action going one way and then the other. Volatility, what happened the next day, retreat into the within the spread of the candle, then a break below this volatility. But look at that candle there. Price went all the way down and all the way back up. Then we had the repeat on the following day, the ton of volume piling in underneath. This was the most interesting candle following this break lower, because we had another volatility triggered here. Big candle, big range, ton of volume going in. Again, retreat to within the spread of the candle. We almost look as though we've got a V-shaped rally, as it were, a recovery, not quite as dramatic as some of the ones we've seen, but we've now hit the kind of buffers, in, as it were. We've hit the VPOC and we've got this big resistance. So these had these nice big wide range trading days. And today we've got the webinar. I'm afraid we're in fairly narrow range, going to make trading a little bit tricky, as it were, on the YM. And on days like today, if you just trade one instrument, then I'm afraid it is a question of patience. What we see on the daily chart, the price action we see here, narrow range, that translates on into the faster time frames. It's a very choppy price action. Again, this is the 3-minute chart. The YM is around the volume point of control. You have this sudden burst of activity, which we've had here, triggering of the volatility back into the spread of the candle. It is trying to rise. I mean, overall, you would say, despite everything, because it's part of this rally that we've had off this volatility candle here, and despite you've got some red candles here, but look at the volume piling in. You've got wicks to the bottom of these candles. That is signifying volume buying. So the price does want to rise, but from a technical perspective, it's now running into this strong resistance at 26, and it's around the VPOC. So it's not easy. And it's going to be a case of, well, can we find a few trading opportunities based either the time charts or more realistically using the Renko chart that I have here. And how we use this is simply, it's very, very straightforward. It's looking at the trend dots, the trend monitor, and when the two are in alignment, just taking a few pips out of the market, because when you do get a decent move, as you see here, you've got that nice move here, which is, when was it read from here, about 25,850, and you would have come out when the trend dots change, 85, 25,800. Yeah, that's a 20, 30 points. And in a day, as I said, where the daily chart is looking quite tricky, that is a nice little move. So we're looking to try and replicate that as much as possible. I just wish it was one of the other days, but that's just the way it is. David's going to be joining us in a couple of minutes. If you've got any questions on anything we say with regard to volume price analysis, or I know we've got some of our quantum customers in the room. If you've got questions about the indicators, I know we've got Ninja, even if you've got MT45, pop them in the chat box and we will answer them for you. That's, you know, about the indicators themselves, how you're looking to use them. As I said, we'd be more than happy to answer them for you. Just looking at the yen index here, we've got a little bit of consolidation, bit of sideways movement here. Again, that is telling us that there's no firm direction one way or another. Overall, the bias would want to be on the to the upside, but as I said, what's going on with regard to the trade talks, and we've got the FOMC later on today. What tends to happen is during these, when these kind of releases are coming up, like the FOMC, expect a lot of consolidation, and consolidation periods of price action is, as I said, you will see ahead of the actual release, but also when the market is just doesn't know how to react and expecting more news. Right, I'm just going to see if David is ready to join us. Let me see if you've got any questions very quickly. What I've got here, let's have a look. MQ calendar is a nice calendar for lots of. Thank you, Ashley. Thank you so much. That's a really, that's a very helpful suggestion. I must admit, I haven't actually looked at that one myself. We used to. We haven't done it for some time. There's a we use trading because we tend to be more on Forex, or I tend to. I've got I've got Talking Forex that I use for, which is for Forex, but they also do give, this one here, they do actually report the general news. You don't get the charts and the trends, as you say. And I know some brokers actually give this as free with your account. The other platform that we use for news is one that's from Metastock, and it's called Zenith, I think. I think it's called Zenith, but that is a subscription one, and it's a very, very comprehensive news feed. Oh, it's very, very powerful. But as I said, I think it's about $99 a month. I mean, if you can get your hands on it as part of a broker feed or something, it's really well worth trying to get hold of. Right, let me just go and see where we are with David, and then we will. David's going to be back in a minute or so. Meantime, something else that we covered in the two previous webinars is we talk a lot about obviously volatility and the triggering of the volatility indicator and what tends to happen with price action once that is triggered. If we look back here, in fact, we've got on this 3-minute chart over to the left, we've got volatility triggered here. What happened? Retreat back into the spread of the candle. This volatility, we have another one here, retreat back into the spread of the candle. Again, this one here it was a retreat, and in fact it was a reversal. What happens with the volatility candles is it's when you have an injection of momentum activity that comes into the market, and the indicator is works on average true range, so it senses that what is happening is, as I said, outside the average true range, and these little purple arrows are triggered. From a trading perspective, if you are in a move and you see this triggered, the expectation is that as I said, the price will retreat to within the spread of the candle before the decision whether it will carry on in the original direction. After the trigger, and if it goes into within the spread of the candle, before it moves, you will sometimes get, as you see here, a period of 2 or 3 candles, 4 candles of consolidation, because what the volatility candle indicator always does when it is triggered on a candle, it gives you additional support and resistance levels. So first of all, if you're in a trade and it's triggered and it goes back inside, then you can use it as an exit. You say, do you know what, volatility is coming in, there's a degree of indecision. Although this has pushed the price lower, there's buying that's come in there, then the price action goes in. It also bounced off the VPOC as well, so that's a very strong support. And as a trader, you can think, do you know what, at this point when the price went back into the spread of the candle and we had that buying underneath it, you could sort of say, well, I think that's, maybe that's going to go higher, but you never really know following the trigger of volatility. So a lot of traders, we've done it, we say, if that comes in, I'm out, I'm staying out. And if you're not in at the point and you see that come in, you can then use it as a sort of a starting point, if you like. Well, okay, that's what the market's done. We have a period of consolidation. Once it breaks, if you like, either the low or the high of that candle, you could say, do you know what? Maybe the volatility has died down, the ripples have died down. In fact, the original trend does actually head lower, and we know it's the original trend because actually trend monitor is still bright red at the bottom here. But it's also followed by another volatility candle, an even deeper one than this previous one. But we have the same reaction back into the spread of the candle, yet more consolidation, a longer consolidation within the candle, longer than this one, and not surprisingly, because it is a much wider price range. And you would think, yeah, okay, lots of buying coming in again. Is that going to carry on? No, we get yet another one. That's triggered again, and again within the spread, buying comes in there. But this time, as you can see here, you say, well, that one's triggered. At what point do you think I could possibly go long on this play, on this price action? And one of the ways is wait until you get a clearance of the high of this candle, a clear clearance. And in fact, you get it here and you get this little move higher back into the back up to the VPOC. And that is a perfectly legitimate way of looking at volatility, assuming you have some kind of indicator to tell you that you're outside the average true range, and also using the candle from the perspective of yet another way of looking at support and resistance. This is obviously Globex. As you can see here, the volume is well, it looks very small in comparison to what you see here, but that is because we have to read volume in the context of the session that is being traded. So we're still around the VPOC. Now we come to this candle here. The low of the candle is at the volume point of control again. So to take a potential short, we would have to wait until that actually breaks below there. It's just another way of, for those of you who have the indicator, is to use it to help you, give you further levels, important levels that need to be broken, for a firm trend to be re-established. And let's turn that down. Let's see what's happening with the yen index, and we can see it is actually going higher. But the way also, if you want to smooth all that volatility out, as I said, the way to use that is have, well, I've got the Renko. I haven't got my tick charts up here. I'm going to use the tick on the end on NinjaTrader 8, not on NinjaTrader 7. And we can see here, we can see a break now here from 25.8 to 50. It's going down through the volume point of control. That is red. That is red. The index is still, the yen index is still going higher. Let's have a look here. That's cleared that there. You might, if you want, wait for that candle to actually close. I've only got the 3-minute and the Renko. You could have the 2-minute chart, the 1-minute chart. David has the seconds chart, as you can see here. In terms of of volume, let's have a look. Well, we've got falling prices, we've actually got rising volume underneath it. So we have a agreement, if you like, between the candles and the volume. This is the distorting volume here, which is, it's the inrush, if you like, at the open, which is what we would expect. Where is this price going to? Well, let's have a look at the levels we have here. Well, we've got a fairly strong platform of support here at just over 25.750 maybe here. Let's have a look. Widespread candle, volume rising. That's what we want to see. Let's see what happens with this candle. Let's have a look on the Renko. What's happening here? That's still red, that's still red, but it has slowed down. You can tell it's just the kind of the price action isn't as doesn't have any momentum behind it. Let's have a look at the daily. I know we're way out. Again, it's on the VPOC. At least the body of the candle is expanding, which is what we want to see. We don't really want to be in a slither of price action, and certainly not in a very narrow doji candle. Let's have a look on this one. Got an up candle coming up now. Not a lot of volume underneath it. Let's have a look, see what's happening. We'll see where that finishes, where that posts. And this is, as I said, with volume price analysis, we say, well, you know, what can it do for you? What does it do for you? It does. I hope you can. The takeaway that you get from David and I is that basically it takes the fear out of everything. You know, when you see you're in a little downtrend, you've got rising volume, you've got falling prices, you say, oh, that looks in agreement, that's fine, I'm not seeing any anomalies. Yeah, you know, price is coming back at me. Yeah, it's going back up, as you would, because nothing goes up and down in a straight line. It's there to, as I said, to take the emotion away from what you are seeing on your charts. And then support and resistance, which is also part of VPA, is, you know, where is this likely to be going to? As I said, we've got this, you know, strongish platform of support here. You can see here on the accumulation and distribution indicator. What's interesting is that if it gets through here, we have a low volume node, which is part of the VPOC indicator, and if price hits below that, if it manages to get below that and it goes through it, that's when it's going to go through with a degree of momentum, because there's no cushion of volume, if you like, to hold it up, to keep it, you know, to stop it falling. That's what I was trying to say. Let's see what's happening on the Renko. See what's happening here. We've got a little green candle, but that's still. We'll see where the trend dot ends as well. The trend dots are really, they are all the indicators we've developed. These are the ones that are really closest to the market. We've got them as close as, I don't think any of the other indicators are as close as this, but it's where they finish. If we're at the top of the candle or the brick, then we know that there is, you know, it's bearish. As you see here, when they're at the bottom, and sometimes you get a red one at the bottom as well, that tells you that that is helping to push the price higher, even though, as I said, you've got a green candle with a red dot. Now, the resistance, this was support, this has now become resistance. This has now become resistance in this price move, but this is still red. I just want to see where the trend dot ends there. On the price chart, let's have a look. Yep, we've got a little up candle, but not a huge amount of volume. Again, it's sort of stuck at the volume point of control. So we'll wait to see where this little move, where it goes from here on in. And looking at the, as I said, the daily chart, well, we're still around the VPOC. Not easy, but not impossible. As I said, it would be lovely if we had one of these big ranging days today, but sadly that's not going to be the case. Do you agree, David? Sorry, I've been wandering on. I do apologise. I think it's time for a change of voice. Do you? I'll move over to you. I'm going to keep an eye on this little move that I've got going on the YM. if I'm short, I'd like to see the yen going higher. I can see it going higher up here. This is 30-minute. Let me just take that down. Let's take it to 10-minute. Let's have a look. Yeah, it's sort of ticking up. Yeah, it's sort of ticking up higher on the 10-minute. In fact, I'm going to move the 480 because that's way far too out. Let's have a look. Let's put the 10-minute up chart here. Let's see what's happening. Where are we here? In fact, what's interesting here as well, we've also got another volatility candle here on the 10-minute. Again, we've got the high and the low of the candle. So we're still actually trading within the spread of this candle, again, around the volume point of control. Tricky trading, but not impossible if you understand the principles of volume price analysis, and hopefully you have some of our tools as well. And as we say all the time, if you've not invested in any of our tools, just buy one, just buy the volatility indicator, because it will help you, in so many different ways. So I'm going to stay on and see what happens with that. Let's have a look on that one. That went red actually, and the trend dot is at the top, which is great. So more bearish momentum to come. Where's it heading? Well, we've got a support line here. That's the sort of obvious price objective for this chart at the moment. And if you do enter based on the VPOC, is also the indicator that you would use when you perhaps thinking of breakaway or breakout tradings, because it's telling you where the fulcrum of the chart is. So, and it's great for stop placement, because the obvious place to place your stop is just above it, and you say you go up maybe to that level there, and how you then, whether you have we don't go for a fixed take profit target. We just let the market take us out, show us where it is likely to be heading, and trade accordingly. Because if you do not constrict yourself, you restrict yourself to a fixed risk and reward. And I know why people do it, and you hear about it all the time, is because when you get a move like we saw this morning in the pound pairs, and you say, well, I'm only taking 10, or I'm only taking 15, the Richard thing moved, was it 150 pips or something? Just ridiculous, was it, the pound? I know they don't come around very often, but as I said, if you understand congestion phases, you have an indicator such as the VPOC, at least it will give you the confidence, as I said, to take the breakaways. You know where your stop goes, and just let the market go. If it's going to go, it is going to go. Right, let's just take that down. Here we are. We are still on the up candles. Got a little bit of volume. Volume has fallen slightly less under this down candle here, but we're still at the VPOC. Right, David, I'm going to keep an eye on the YM, see what's happening there, and I'll pass over to you, darling. Is that all right?
Hi everybody, and apologies. I'm back in full flow now. Let's just move that out of the way. Here we are, Ninja 8, and I've got the initial workspace up with the dailies across the top line, and we've got the 5 minutes on the bottom line, and it really just does reinforce what Anna was saying. Top line, we've got the YM on the left, the EAT in the middle, and we've got the NQ over on the right. So you've got a full array of the three primary indices there. Down on the 5 minutes, and these again are all very similar. They're all saying pretty much the same thing. We've got the volume point of control is in evidence, the yellow dash line on the 5 minute time frame right the way through, and it's also in evidence on the daily. And on days such as this, it's just a question of being patient. And boy oh boy, look at the volatility. Absolute ton of volume comes in, spikes up. You can imagine traders jumping into this, looking for a quick move, bang, down it comes, back inside the range of the bar, and now we're trading back down to the downside, and an absolute heap of volume below it. It really does reveal everything you need to know about price action and the trap moves that are going to be going on throughout this run up to the FOMC. Whether it ultimately moves as a result or ahead of the FOMC, we will have to wait and see. But even on the daily charts, you've got exactly the same. We had this big move down to the downside. Volatility is triggered. The market reacts and moves back up to the VPOC, trades back inside, trades back inside, trades back inside. And then you're over onto support and resistance levels coming into play, etc., etc. That's on the 3. Let's head over to the multiple timeframes where I think I've got the ES set up. There we go. We're on the ES. And I've got the fastest time frame. I've got 15-second over here, very quick, up to the 5-minute. Let's just take that down to, let's make that 3-minute. There we go. But again, you can see the volatility spikes coming in into the VPOC, trading around, congestion, very, very thin markets. This is what it's doing on the daily. That's where we are at the moment. It's not to say you can't trade in there, but it's pretty tricky. It's very tight. It's range bound for the time being. It's a question of just waiting and being patient and seeing what develops, if anything. The 30-minute just reinforces that massive volatility candle with long-legged doji, narrow body, big wicks to top and bottom. That's the level of price resistance that's in at 28.68. Very strong platform of support in here at 56. So, it's a really tight range we're in at the moment, and some very strong levels developing, and we're around the volume point of control here as well on the 30 minutes. So, there's a ton of reasons to either be patient or go and look for other opportunities in other markets, or simply wait for a level to be taken out. If you're looking at this from a level perspective, then to the upside, certainly anything, it would not be worth considering anything until the market's broken through 70, 72, 74, that sort of area. And to the downside, probably well below 48. You've got this very strong platform. If that's broken, that's fine. Through a less strong level here, which has only been tested a couple of times, you can maybe not see, but it's on the screen at 2. This one's been tested several times. This is very strong. The thickness of this line on the accumulation distribution indicator is fantastic, because every time it's tested and holds, then it gets thicker. In other words, it strengthens the whole time. So it does it automatically. So if it's tested 2 times or 3 times, it builds. If it's tested 5 times, it gets thicker and thicker. And it's constantly rebuilding those every time it's tested. Works in all time frames. So some pretty thin platforms here, potential platforms of support. You can see that's been tested down there on that particular candle. It's a little while ago now. And if we get through there, then we've got much lighter volumes in terms of the volume point of control. Down at this lit, we've got low volume nodes here. So if the market does get down to those levels, it will slice through there relatively quickly. Let's just go back. Let's go back to the 15-second. It's always a good chart to hone your VPA skills on. To see how that develops, see whether we get any price movement. As it goes on to the 3-minute, just see whether we're going to break away from the volume point of control or not. And again, it's all down to levels. You've got the levels here of price resistance overhead. You've got one here, you've got one here. We're still trading in this volume point of control candle. To the downside, you've got levels here, you've got another level here, further level here, and then we're down into relatively light volume. And this stands out like a telegraph pole. There's a ton of volume that came in on the volatility. I don't know what triggered it. I wasn't in front of the screen at the time. I don't know whether it was something someone said. Don't think there was any news particularly. I think, was it Bullard was speaking, was he? Can't remember. Could have been a Trump tweet. The oil inventories have come and gone after that, so it certainly wasn't that. These things happen. Sometimes they happen for reasons, but you can certainly be assured there was a ton of big operator involvement in that particular move. Let's see where we go. Let's go and have a look at I've got the tick charts running as well. Be exactly the same pattern of price action. There we go. I've got the 1-minute, the 3-minute, and the 5-minute. I think we've got the 5-minute there at the bottom. Yep, there we go. That's the 5-minute. So I've got a 377 tick chart here. This is 233, so I'll just change that. Just put that in as the number, and the follow it with a T, that converts it to tick, so that's 377 tick. This is now running at 987, and it's running at the same speed as the 5, so it's all a little bit sluggish right now, which is what you expect. The beauty of the tick chart is that it's a non-time-based chart, and as a result, you will see momentum revealed in the chart itself because it's not governed by time. Whether a tick candle takes a millisecond, a microsecond, a nanosecond to build, it doesn't matter because it will build as soon as that metric that is set on the chart has been established and met. So on the 377 tick chart, once 377 ticks have gone through, then the candle will complete and move on to the next one. However long that takes, as I say, whether it takes a nanosecond or a microsecond or a millisecond or seconds, doesn't matter. It will just complete as soon as that that condition has been met of 377 ticks. And it'll move on to build the next candle. And the beauty of trading on these charts is you see that momentum. You don't see that on a time-based chart. What you see on a time-based chart is volatility. What you see on a tick-based chart is momentum. You'll see the speed of the market. And that's why particularly intraday scalping traders, particularly on index futures and commodity futures, like trading using tick charts because they are non-time based. Exactly the same way as the Renko is below. That's, again, a non-time based approach. You can see here on the 1 minute, what we've done here is we've blended time and tick. Because what the tick speedometer does, it delivers the tick setting, the optimal tick settings for that particular instrument at that particular time. These are constantly changing throughout the session. They speed up, they slow down, as you would expect. When we move into these orange phases, this is the norm, if you will, the average, if you like, the expected sort of price action. Then when you get these green color changes, this is when you get spikes in the tick activity. And they're always, they draw the eye straight to them because when you see the green color changing, that's telling you there's participation, there's a big surge in activity, and it's generally reflected in the price action. When you're in these dull phases of red, then generally you're moving into phases of a lack of participation, and price action tends to migrate into congestion phases, as we're seeing at the moment. So whenever you see these red sections on the tick speedometer, that's telling you we're in sluggish territory. Markets are not fast moving. Typically, these values here this should be on a 1 minute, this should be several hundred ticks. This will be into the thousands, as indeed will this one down on 5 minutes. So it gives you an idea of how sluggish we are at the moment. Just see if we can get a breakaway. Let's go back to the time-based charts for a moment. Let's just have a look at the 15-second, which is always a good place to start. There we go. Nice volume increase under that particular candle. Fallen away a little bit under the last one. Still around the volume point of control, so it's still too early to entry, but it seems as though some bearish sentiment is now starting to build, although we've got volatility triggered. Look at the volume that's coming under that candle. So we've had a volatility trigger on 15-second and a strong volume associated with it as well. So we're expecting a possible reaction inside the spread of that candle, though it's pretty narrow. Just push that up full size. There we go. What are we seeing? Reaction inside the spread of the candle. And again, you can imagine traders jumping onto this one. Ah, terrific. You know, we're going to see a market move. Bang. Gone to the downside. Now it's gone to the upside. Why? Because you've got a load of volume under there and you've got volatility. And now we're seeing some buying coming in. Now we'll see if we get a move through. Once we clear this level here at 55, the lower end of that particular candle, then we can safely move away from that, 55, 54, 53. Then we start to move away from it. While we're still trading inside it, it's a case of wait and sit in your hands. You can see the volume here has fallen away quite dramatically. Big spike here, now it's fallen away back to normal levels in inverted commas, if you will. Okay, we've got a low volume node coming up. Trend monitor's bright red, supporting the move. Let's see if we're going to break through that region.
Are you on the YM or ES?
ES.
Oh, right, I've got the YM.
Anna's got the YM, I've got the ES up here.
I've broken through that support line that I was talking about.
Okay, we've got a little bit of a run up in volume, so that's nice to see. Increasing selling pressure. So we're looking for a move to the downside. But constantly aware of the fact that we're trading this against the backdrop of a pretty major news release coming up later in the session. So it's a question of being light on your feet, not staying in too long, not outstaying your welcome, not holding this for, I was going to say a long time. Long is all relative. Could be a long time in this context, could be a few minutes. Got some buying coming in onto that candle. Let's move to the slower time frames of 3 minutes, just see what's going on there. Different context coming down to test this potential platform here, this little platform here at 54, and another one at 52.5 down here. If it went through 52, then you might consider that a safe place to enter. Personal decision. If you think that platform is strong enough once breached to act as resistant, that's fine. Excuse me. Switch that off again, sorry. But normally in a price waterfall, what you want to see is momentum. You want to see the price action developing, either in terms of widening spreads or in terms of rising volume. You don't want to see this sort of sluggish price action that we're seeing because we're still trading around the volume point of control. It hasn't got any momentum. And essentially all that's happening is that the participants in the market are just simply sitting and agreeing that the price agreement point is the fulcrum of the market. So for the time being, a fair value, if you like, for the ES is currently 28.58. And until bearish sentiment takes hold or bullish sentiment takes hold, that's where it's going to sit and the volume will continue to build. Let's go back to our 15-second chart. We've got a 2-bar reversal come up. You overlay that candle on the top of that. What have you got? You've got an up thrust, up, down. That's on 30 seconds. So if you looked at this on a 30-second chart, this would just have a candle with a deep wick to the upper body and a very narrow body if it had any body at all. Decent volume underneath, a bit of selling pressure coming in, attempt to rally, very weedy. Look at the volume. You've got falling volume, rising market. That's not going very far. And indeed it hasn't, and we've now rolled again. And we actually managed to break through that, which is quite interesting, but we've closed below it again. So now looking to build, we've got rising volume profile coming in, lower volume, higher volume, narrower spread, wider spread, classic relationship. Decent volume under that one, looks okay. Now you're down to sort of levels that you might consider as an entry. Down onto the very slow time frame chart of 30. I know it's a big move from 15-second down to 30, but what's interesting here is this level here, which is very, very strong. And remember that slower time frame levels, and this applies really generally as a rule of thumb, whatever levels are developing on the slower time frames, they will always carry more weight than levels on a faster time frame, simply because they are much more significant in terms of the time that any market has been sitting there. So if you have a strong level on a 30-minute chart, it's going to have much greater significance than a strong level on a 5-minute chart or a 30-second chart. That's not to say that the very fast time frame is not important. They are. All I'm saying is that when you see something like that, then if the market is going to react and break through there, it's going to have to do so with huge volume, because this carries much more weight and strength in terms of any reversal, and therefore offers you much more protection should the market reverse against you in a short-term rally. This level here is really what we're aiming for. It's somewhere between 52. Once it gets down to 52, 51, then you would expect it to go through here relatively swiftly, because there is very light volume. But you've got to get, first of all, it's got to get through these two relatively minor levels of price support at 54 and 52.5. Very neat line of price action through there. Okay, coming down to test this level now. Okay, see if it closes below that one. If it does, we could be going down to the next one at 52.25, 52.30, something like that. Providing some support at the moment, as you can see. Make a rally, rising volume, rising price, back up to the volume point of control. Let's take that down to 2 minutes. There we go. Just gives us another perspective. We've got a stronger level in below here, which is why it's halted progress at the moment. Acting as support. In fact, we've got 2 or 3 levels. Very strong one there, less strong here, and a very minor one here. So from an entry perspective, short, then through 52, even 51, away you go. Patience, patience, patience. Something none of us are good at, myself included, I can assure you. When you're in front of a screen all day, which we do, it can be hard to sit on your hands. It's a lot of traders who don't have that luxury, that privilege, think it's the ideal. In some ways it isn't, because it does open the way to overtrading through boredom, lack of patience. If you're too impatient and you just want to be trading all day, and let's face it, that's what we do to make money, is trade. And it's easy, the frustration builds. You think, oh, that's an hour gone, I should be trading. I'm just sitting here looking at a chart, not doing anything. It's very difficult. So it's good and bad in a way. It's not perfect. Nothing's perfect. If you're not in the front of a screen all day, it's in that sense, it's a positive way of learning how to trade. When you are in front of a screen, it has negative aspects to it as well. Nothing's perfect. Looks like that level is holding for the time being. Let's just flick down, have a look on 2. Very narrow price action, very contained, very sluggish. We go back onto the tick charts. I'm sure they're running at very slow speeds. There we go. Okay. Okay, we're at 377 still. We're up at, this has dropped to 610, and the other one is now at 9. And the reason there are two values here is because this is the actual, but this changes frequently, not as frequently as it does when markets are fast moving, but nevertheless it does change relatively fast, which means you'd have to change your charts literally every 5 seconds or so. So what we do is we develop the nearest logical number to the actual to negate the need for changing the charts literally on an intraday basis every few seconds, which would be tedious. So this is the closest to the actual, but you can actually run them in actual. And basically what I do is when I'm trading on Globex, which is just the electronic market, I tend to just use the actual because they don't change so frequently. And when we're running in cash and Globex, then I tend to use the nearest number, which is the associated fib number to the actual, which is pretty close. But as you can see, not a lot of green and a lot of orange and quite a bit of red scattered around the place. So it's just indicative of a market that is sideways, congestion, not a lot going on, nothing even negative to drive them in terms of trade wars or the trade war of words. What's the yen doing, by the way?
Going up.
Let's have a quick look at the index. Oh, sorry. Let's just go over here onto the 3 primary indices. Just drop that out of the way. This is the yen index. That's the yen index on 5. So, you know, the buying that we've seen for the yen, certainly latter part of the London session, that's kind of carried on higher. Not particularly dramatic, but nevertheless, it's just saying that that is the sentiment in the market right now, and it's what we expect to see with a falling market. We've got the rising yen. Euro's on the slide, and this is the dollar, which is basically moving sideways for the time being. Had a bit of a rally earlier on, but it's now gone back to its shell. 2-bar reversal, 2-bar reversal. We find them all over the place. One at the bottom here, 2-bar reversal as well. That's the 3 primary indices. Let's just check out the workspace here on the dailies. Pretty much identical. It's always a good idea to have these up together because they give you a slightly different perspective on price and volume behavior. They will be very much the same generally speaking, but not always. The NQ will sometimes lead, and it will also sometimes give you a heads up as to opportunities that are developing, purely because if the NQ is leading, then, and sometimes it leads the ES as well, it gives a heads up to the sentiment in the market and the expectation of a move in other related indices such as the Dow. That's where we are on 5. Testing these levels, all pretty much in the same ballpark. Let's just go back onto the multiple time frame of the YM. Sorry, beg pardon, the ES. And it's always quite funny when we do these sessions where the market is in quite a tight range and very congested. What often happens is as we end the webinar, then the market starts to move and you get some nice trading opportunities. So if it happens, it happens. If it doesn't, it doesn't. We just have to be patient and wait. Come back up to test the VPOC. Let's put that back to 5. Lots of levels up and down the chart, but the really strong ones are in. This is very strong here. We've got the volume point of control as well, the fulcrum. So you've got an absolute heap of volume and a heap of price resistance in this region, around 58, 59. And you've got falling volume under a downwards market, so you know what that means, and that's the reason we're seeing a little bit of an uptick at the moment. Now let's go and see what's happening on. Let's go and have a look at quick look at commodities. Let's. I can't remember if I've got oil or gold up here. Well, yeah, got gold up at the moment. This is the June contract we're on. I think the oil has moved over onto the July contract, but we're still on June with gold. And that's the daily for gold. It's really struggling to find any longer term bullish momentum. Just constantly has these rallies which promise a lot but really just cannot deliver. You know, we've had this one up here, down again, tries again, back down, tries again, tries again, tries again, and it's constantly repetitive price action. What's on the daily, and certainly from an investor perspective, it doesn't look terribly encouraging, but it's been range bound in that sort of 1200 to 1350 for a long time now. From an intraday perspective, not really too bothered. It's just a question of getting on the right side of the market and just applying VPA and the indicator in exactly the same way. It's the 5 minute. Trading around the volume point of control here again. Let's move that out of the way, which seems to be a common theme at the moment. Some very strong platforms of price support in here at 74 and 73. But look at the volume. The volume's falling away, so we've got a market that's trying to rally. It's terribly weak. You know, as the market's trying to rise, the volume's falling. So what does that tell you? It just tells you that this is not a strong move. It has some bullish sentiment, but there isn't enough bullish sentiment to drive that market hard, and so it falls away, weak and tired. And you've got lots of volume resistance overhead in this region as well. If it got up to this level, up through 77, then you know you're clearing away because you're through. There's very little price resistance there, and there's very little volume resistance. So again, it's a question of setting levels. Equally, the downside, similar sort of thing. Once you get to 73, below 73, low volume, and you know not a lot of volume either to act as potential support there. I'm going to pass back to Anna at that point because we've actually been on and out, and apologies for my absence earlier on.
Welcome back. Here we are, back on the YM. Go back to the 3 minute chart, and we'll see what's happened what's been happening while David has been speaking. And the move, we did have a little move lower away from the VPOC. It didn't really manage to get through this, as I said, the support platform that we had here and into the low volume node, which is what we wanted for to give this move some momentum. From a certain with regard to volume, we've had this was a nice little candle here. We had a little hammer candle with a reasonable amount of volume underneath it, and now what we've got is we've got the reverse of what we saw previously, where we have some rising prices with reasonably rising volume. Not hugely, not encouraging is the wrong word, but it's probably in line with the candles that we're seeing at the moment, but again, it's gone straight back into the general area of the volume point of control. It is really reflecting again the daily candle here, which you see, which again is at the VPOC, and again has this very strong resistance up ahead. And what I was going to say as well, the bias of the day, you should say it's to the downside, to the upside. It's a little bit unclear. I mean, generally, we are seeing this this rally from this volatility candle here. It's been in a general uptrend, as it were. You've got higher lows, higher highs, and higher lows. But it's a bit messy, as you know. A trend can be with volatility, without volatility. You have a clean trend. You can have what I call a messy trend, and that's probably one that best describes it. Let's have a look on this one again. Well, it's certainly making an effort to, if you like, capture the rally that we've had overall in the last few days, and but we shall see. I think, anything you want to add to that on the YM, David? No, as I said, so you know, it's some reasonable two-way price action, but certainly nothing in the range that we've seen in previous days. And given the support, you know, the strong support and resistance, certainly the resistance that we have up here, and it's I'm not sure that we're going to see that, partly because we've got the FOMC later on today. So we'll see if Mr. Powell can give it a bit of a boost, as it were. Right. Thank you so much for coming today. It's been lovely, as always, lovely to have you here. As David said, it's always, it would be nice to get a nice big ranging day, but not to be. The indicators are from the our own quantum trading. This is the front page of the site. As you can see, we've got them for TradingView, Ninja, and MetaTrader, but we are now starting on TradeStation, which is very exciting because we haven't used TradeStation for some time, and it means we can go back to using it as well as Ninja, which is great fun. The set of indicators that we've been using is from what we call our essentials package here. As you can see here, this is the list of indicators included. The whole package comes to 1,400, but it's actually discounted to 749. You don't have to buy the full package. You can just start with one. And I said, if you were going to start with one, start with the volatility indicator. I think it's $57, David. Yep. And if you buy one, and you can either send it back within 7 days, you're not happy with it, happy to give you a refund, or if you buy one and then you want to upgrade to a bundle or the Ninja, the essentials package, we will always credit you with whatever you have spent with us. Anything else you want to say, David? That's it. Brilliant. As I said, thanks for so much for coming along, and enjoy the rest of the trading day, obviously with the US session, and the rest of the week. We are definitely back next Thursday. So take care, everyone, and thank you again.